Welcome to the Hamsig Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Wednesday, August 1st, 2012. For the market internals, the New York Stock Exchange Advanced Decline Differential closed at negative 667. Nasdaq Advanced Decline Differential closed at negative 1,137. There were 34 new 52-week highs for the S&P 500 and 7 new 52-week lows. This is a good number taking into consideration that the market was down for the day. For the volatility, we saw 199,000 contracts traded on the VIX today, with 33 million in total premiums paid. For the dollar-weighted put-call ratio in August, we saw a 2.26 reading, which is bullish, with 34% of the total premiums paid. For the November dollar-weighted put-call ratio, we saw 1.3, a neutral reading, with 23% of the total premiums paid. And in January, we saw a 2.3 reading, which is bullish, with 24% of the total premiums paid. Here we have the daily chart for SPX. Pretty important day today. FOMC was out and the market sold off after the news that we were not going to get any stimulus right now from the Fed. So you can see here this trend line right now. We touched the upside, was acting as resistance. We did not able to break it to the upside, and then we sold off. We touched positive 1 sigma and basically closed there at 1375.32, and we closed there. So we are still on the positive 1, positive 2 sigma channel. Tomorrow again is gonna be a critical day. We have Draghi coming out to talk from the ECB, and we're gonna have to see what he comes and say out. Maybe they're coming out with another QE or lowering rates, so we're gonna have to watch. Levels remain the same. 1360 on the downside and 1390 to 1400 on the upside. We're gonna look at the intraday action on the market to see what happened, and we're gonna start here with the 5-minute chart for SPX. We started at the opening, we gapped up, futures were higher, and pretty fast we went down. We did not break anything from the futures overnight. We did not break the highs and sold off. After that, we got a bad economic data from PMI going lower, and the market sold off here, as you could see. After that, the market tried to rally somewhat, almost going to the highs of the day, and pretty much stayed there on a range until FOMC came. When FOMC came, you could see here we started dropping before it, and after it just came at 1:15 Chicago time, we had a big sell bar here on the 5-minute chart. This bar was after taken to the upside. We tried to take the lows, it was not possible, tried again, not possible, and then the market just started rallying higher. Then we tried to sold off again, pretty much on the same range, 3-4 handle range here. And after that, we tried one last time here to make any low, not possible. Market rallied, and going into the close, the market did sell off pretty hard, but we did not make any new low here on the market. So again, it wasn't as a big day as we expected. We had some support at 1366, 1370 right now, and we did close at 1375. So we're looking again to the upside and the downside for tomorrow's meeting with the ECB. For the SPY targets, we're gonna look at the daily chart first. You can see here we clearly on the positive 1, positive 2 sigma channel. We're holding this positive 1, which is good, and we could be seeing here some type of bull flag right now. You could see here the pole, and this is the flag. We want to see then a continuation higher to this 140.72 level would be the best here scenario. So we're gonna have to see what happens tomorrow and Friday. We have still a very long week ahead with ECB and non-farm payrolls coming Friday. So the upside target on SPY is 140.72. That's the positive 3 sigma. And on the downside, we're looking for 136. If we are able to break 136, maybe on some bad news or some bad economic data, Our next target would be 134.50. Those are the targets here for SPY right now. Here we have also the support, pivot, and resistance line for the weekly chart. Interesting noting here that almost the same levels at the Sigma channel, so some confluence here at the 140 and 80. Other one was 140 and 70, and we're looking at the downside target at 134.78. We talked about 134.50, so pretty much 134.78, 134.50 would be the downside target if we do get a miss on non-farm payrolls, on not what we expect tomorrow with the ECB. So these are important lines from support, pivot, and resistance for SPY on the weekly. For the GLD chart, we have here the daily chart. Yesterday we had an outside day reversal to the downside. Not very positive here. We sold off quite a bit, and today we have a doji almost down 1%, but it was a gap lower. So you can see here we're right now at 155.14. As we mentioned, we never broke this 158 as we talked about to get some momentum and interested on the bullish side for the GLD. We're still on this range bound from 157.5 to 150 on the downside. It's a pretty good range and could be traded fairly easily. You could see here it has acted very well every time it has gone up, and the same we could tell about the lower targets here. Every time it wants to break lower, it just goes up back again. So still we have no break on the upside for GLD. Now CI pointing lower. CI div now turned negative. And we are right now almost at 0 sig on the daily chart. Interesting, we are going to have to see here that after yesterday's big reversal, we're now looking at almost a percent lower today. Next target on the downside would be 154.50. And below that we're looking for the 151 quarter. That's the -2 sigma. We'll have to see what happens here. Again, tomorrow gonna be critical what happens to gold. If ECB wants to do some type of QE, maybe gold's gonna rally somewhat, but we will have to see the reaction here. Today was not good for gold. We're gonna look at the intraday action for GLD. This 5-minute chart explains it pretty much. What happens, you can see the overnight gap on the futures were lower, and we opened pretty much where we ended the day. Throughout the day, pretty flat here until FOMC, and somewhat on a higher range from the opening. Then we sold off a bit, bounced back pretty fast, and finished almost where we opened. So pretty flat intraday on gold. Action was overnight, selling off into the futures overnight. We're gonna watch at the support resistance and pivot for the weekly on the daily chart here to see more targets. Here one can see we broke pivot line in yesterday's gap and today's open. So now we're looking for 153.80. That's gonna be our support number 1, and then we're gonna look at 150, support number 2. Those two levels are going to be critical to see what happens here, to see if we're going to start this downside trend again, looking downward on gold, and maybe come even and test this support line we have at 149 with the quadruple bottom right now. So we're going to keep an eye here on gold for sure to see what happens, and to see what happens tomorrow with the ECB meeting. Here we have the daily chart for VIX. You can see here we have an outside day reversal to the upside. VIX closing basically flat for the day, 0.16%. We are right now at 1896, and we see somewhat basically a doji here. Nothing happening right now. The only important thing to take from this chart is that we have an outside day reversal to the upside. We're gonna see how that happened here on the intraday action. You could see how the VIX opened higher here, tried to go higher as we were making some lows, and then during FOMC we did not make any new action here. It gapped down, went up basically, and that where we opened, but we reversed from the lows, which was important here. For the targets on VIX, we are right now looking at 1772 on the daily chart. That's the 0 sigma. We want to break that to the downside, then looking for 1650, and on the upside we're looking for 2015 and 2140. Those are the levels. If we do get a extreme pop, we're looking for a 25-26 level, but that's only on extreme cases. But the VIX is known for doing that, so we're looking for here testing maybe these highs, 24-25, even going to 26. But on the normal range, we're looking for 20-21 quarter, and on the downside 1650 right now. We have a special offer by TradeStation. Get your Hamsi Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great night, and I'll talk to you tomorrow.